Okay, you've probably seen the TV shows on flipping houses or saw a neighbor do something or heard something about it. Let's look at the actual math behind it. What's going on here? Let's say you find a fixer, a home that needs repairs for $700,000. You estimate that you're going to pay $75,000 to fix it. New kitchen, new tiles, that sort of thing. You have some kind of carrying cost, $25,000, just keeping the utilities on for that period of time, that sort of thing. For a sales price of about $1 million. And that ratio is pretty normal. You want to buy these houses at 30 to 40% discount to the end retail price. On the back end, you're going to have escrow fees, real estate commissions, that sort of thing of about 5% for another $50,000. So your total investment in this case is $850,000 for a gross profit of $150 and a total return of about 17.5%. And you say, hey, that's pretty good. 17.5%, that's better than other things. But remember, this deal is going to happen in 6 months or less. So an efficient operator will do this same deal twice a year, giving you an annualized return of greater than 35%. So that's really good. That's the total return on a house flipping business if you're good at doing this. But that's not where the real power comes from. That's not why people do this. Let me show you the real power in real estate investment, and that's the return on cash. So from a cash flow perspective, not a total return, but a cash flow perspective, we're still going to buy this house at $700,000, but we're not going to pay $700,000 in cash. We'll get a mortgage for that. We'll put 20% down, and that's $140,000 out of pocket. We still have a rehab budget of $75,000, but we're not going to pay $75,000 cash. We'll get a rehab budget, we'll get a line of credit, or we'll roll it into the mortgage as a home improvement, and that won't cost us anything in cash. The carrying cost will actually go up about $50,000 because, again, we have to pay the ongoing interest for these loans. But it's only a 4 or 5 month period, so the total cost is actually not that big. And then escrow fees. Do we have escrow fees? Sure, but that's not a cash expense. That comes out of the top. It doesn't cost you anything. It's just it reduces what you get after the sale. So you end up with a total cash outflow of $215,000. So for the same deal over here, you paid $850,000, but in this case, you pay cash of $215,000 and get a return on cash of $100,000. That's a return of 46% in less than 6 months. And again, you're an efficient operator. If you're any good at this, you're going to do this twice a year to almost double your money each year. And you might look at this and say, hey, that's fantastic. Why are these numbers so high? Why haven't I heard about these numbers? There's 3 things going on here. There's 3 reasons why people invest in real estate like this. Number 1, most importantly, is this leverage, right? You see here that we're spending about $250,000 for $850,000 of investment. That's about 4 times leverage, right? You're not going to get that anywhere else. You're not going to get that in the stock market anywhere else. But the second thing is we have the ability to improve the asset. That you can do that with houses. You can't do that when you buy a stock. You can't do that when you buy a small business unless you're going in there and running it every day, a venture capital firm, anything like that. You don't get a say in that. They just have that business over there and you hope that they improve it. But you can actually improve the asset when you buy a house. Put in new bathroom, that's your work that improves the asset, right? And then the last reason why this is so, these numbers are so big is because this assumes you're an efficient operator. You have to know what you're doing. If you don't know what you're doing here, this number is not 93%. It can go negative really quick, but an efficient operator can do this. So those 3 things together are what makes this such a high number. So I know of many deals like this that are available right now. If you want to get involved in that, whether you want to do it yourself, you want to get our input, you want to get our help, reach